Hi Colin, thanks for joining us. So can you explain to us, given that China has had a very challenging time this year, it's had COVID lockdowns, it's had a tech downturn, it has had property issues, can you explain when you think that the Chinese economy will be on a firmer footing?
Sure. The COVID lockdown imposed by the Chinese government had a fairly significant impact on its economy. In terms of data, the second quarter GDP by China only grew by 0.4%, and largely because of all these lockdowns that were being imposed on several major Chinese cities. I believe that the Chinese regulator will have to basically reconsider its zero COVID policy in the months ahead. This announcement, if made, will certainly boost consumer spending, as well as Chinese travelers moving around all cities. Basically, this announcement will be a boost to the Chinese stock market.
So Colin, what is going to happen to the Chinese property sector?
The Chinese real estate market is actually undergoing a slump for already more than a year. The recent issue were mortgage strikes by homeowners as they have not received physical delivery of the property that they have purchased. So with this issue in mind, the Chinese government actually stepped up in terms of trying to ensure that physical units are ready and to be delivered to the homeowners. Unfortunately, that will take at least half a year to a year to ensure physical delivery of these properties. But if they have done so, then I would say that at least that will alleviate the concern that the consumer mortgage segment will be under asset quality issues.
So which of the Chinese sectors do you think has the most potential?
China is progressing very well in the electric vehicle space. In fact, the Chinese government has decided to invest heavily in the electric vehicle segment 10 years ago. Right now, China basically have more than half of the market share in terms of electric vehicle sales. This segment are likely to continue to grow in a fairly robust rate over the next 10 years. In fact, what happens now is that EV cars as a percentage of new car sales is just 22%. We still will have a lot of replacement demand as we phase out the older combustion engine cars. But having said that, the one segment that we are very keen in is actually the EV battery space. The US and Europe are basically lagging behind this significant industrial segment, and they will require a lot of catching up to do against China.
Let's talk a bit about the risks. We know that there are geopolitical tensions between China and the US. How will this affect the Chinese equity market?
The rivalry between these two top nations will certainly continue in the years to come. The only interesting fact is that China and US had a pretty strong relationship since 1970s. In fact, their economy is pretty much intertwined with each other. So in a way, while they are still doing business together, there is also a rivalry that we are also witnessing right now. Of course, when we talk about China and investing in China, you have to consider the Taiwan issue, which is a fairly sensitive topic for China. My belief is that China government will want to pursue a peaceful unification with Taiwan. And I believe that this peaceful process will certainly be carried out by President Xi Jinping over his next term.
When can we expect some upside from Chinese equities?
In our analysis, if you use the traditional valuation yardstick, whether it's on price to book ratio, on price to earnings ratio, the Chinese market is actually trading at -1 standard deviation from its 10-year mean. In other words, Chinese equities is at attractive value proposition right now. What it needs is a catalyst for the market to move higher. one of these catalysts come in the form of an announcement of a change of zero COVID policy stance.
Thank you, Colin, so much for joining us today. It's been great. Thank you for your
Thanks.
insights.